Institutional Equity Research Report. Cloudflare Inc. 36% revenue growth, a 20% workforce cut, and a bet on the agentic internet.
Executive Summary. Cloudflare, Inc. is a San Francisco-based internet infrastructure and security company founded in July 2009 by Matthew Prince, Lee Holloway, and Michelle Zatlyn, with roots tracing back to a 2004 anti-spam research project called Project Honeypot. The company publicly launched at TechCrunch Disrupt in September 2010 and went public on the NYSE in September 2019 under an IPO codenamed Project Holloway in honor of co-founder Lee Holloway, who had stepped back from the company in 2016 following a diagnosis of frontotemporal dementia. Today, Cloudflare describes itself as the leading connectivity cloud company, and its network reportedly touches roughly 18% of all websites globally, including major properties like Netflix and the New York Times. In plain terms, Cloudflare sits between websites and the rest of the internet, providing a combination of security, blocking cyber attacks and malicious traffic, performance, speeding up content delivery, and increasingly, application development infrastructure, letting developers build and run software directly on Cloudflare's global network. This connectivity cloud positioning has made Cloudflare a genuine growth story for years, but 2026 has added a second, more complicated chapter. In May, the company announced its first mass layoff in 16 years of operating history, cutting approximately 1,100 roles, or roughly 20% of its workforce, as part of what co-founders Prince and Zatlyn described as a shift to an AI-first way of operating the company. Q2 2026 results, reported August 6, 2026, showed both sides of this story clearly. Revenue accelerated to $696.1 million, up 36% year-over-year, beating both the company's own guidance and analyst consensus, with record growth in large customers and a dollar-based net retention rate that climbed to 120%. At the same time, GAAP net loss widened to $170.0 million, driven overwhelmingly by a $150.7 million restructuring charge tied to the workforce reduction, and gross margin continued compressing as the business mix shifts toward higher compute AI and developer products. Key facts at a glance. Business. Connectivity cloud combining CDN, DDoS protection, web application firewall, zero-trust security, and a serverless developer platform. Founded/IPO. Founded 2009, IPO September 13, 2019, NYSE. Q2 2026 revenue, $696.1 million, up 36% year-over-year, beat guidance and consensus. Q2 2026 GAAP net loss, $170.0 million, driven primarily by a $150.7 million restructuring charge tied to the workforce reduction. 2026 restructuring. 1,100 roles cut, roughly 20% of workforce, first mass layoff in company history, framed as an AI-first operating shift. Fiscal year 2026 revenue guidance, $2,864 to $2,870 million, raised from a prior $2,809 million midpoint. Dollar-based net retention, 120%, up 2 points QOQ and 6 points year-over-year. This report is intended to give both professional and retail investors a clear-eyed, plain English view of Cloudflare's business, its most recent quarterly results, and the key risks and catalysts likely to matter over the next 12 to 24 months. It is not a recommendation to buy, sell, or hold NET shares. Section 2. Investment Thesis. The bull case for Cloudflare is that it has built a genuinely differentiated, expanding platform at the center of two major secular trends simultaneously: enterprise cybersecurity consolidation, as companies replace multiple point security vendors with Cloudflare's unified platform, and the emerging agentic internet, in which AI agents increasingly need the same kind of connectivity, security, and compute infrastructure Cloudflare already provides to human-facing websites. Revenue growth has now accelerated for 2 consecutive quarters: 34% in Q1 2026, 36% in Q2 2026. Large customer additions hit a quarterly record, and net retention climbing to 120% shows existing customers are spending meaningfully more over time, all while management says the company remains ahead of its own internal target for reaching GAAP profitability by 2028. The bear case centers on two related tensions. First, valuation. Heading into Q2 2026 earnings, Cloudflare traded at roughly 48 times sales, near a record-high share price, a multiple that leaves very little room for anything less than a substantial beat-and-raise quarter. And independent analysis specifically flagged that a standard beat may disappoint at that valuation level. Second, and more unusual, is the restructuring itself. A 20% AI-driven workforce reduction is a significant, unprecedented event in Cloudflare's history, and while management frames it as a proactive efficiency move rather than a demand problem, the market's sharp negative reaction when it was first announced, shares fell 18 to 24% around the Q1 2026 report, shows real investor uncertainty about what this signals for the durability of Cloudflare's growth and execution model going forward. Thesis in one sentence: Cloudflare's growth is genuinely accelerating, and its net retention and large customer metrics are best in class, but investors are being asked to pay a premium valuation for a company simultaneously undergoing its first major workforce restructuring in 16 years, with real questions about execution risk and margin trajectory still unresolved. Section 3. Company Overview. Legal Entity: Cloudflare, Inc. Headquarters: San Francisco, California. Exchange/ticker: NYSE/NET, Class A, Russell 1000. Founded: July 2009 by Matthew Prince, Lee Holloway, and Michelle Zatlyn. Co-chairman and CEO: Matthew Prince. Co-chairman and president: Michelle Zatlyn. Chief Technology Officer: Dane Knecht. IPO: September 13, 2019, NYSE, codenamed Project Holloway. FY 2025 revenue: $2.168 billion. Employees: approximately 5,156, pre-restructuring. Corporate history: Cloudflare's origins trace to 2004, when Matthew Prince and Lee Holloway launched Project Honeypot, an anti-spam research effort that surfaced a harder underlying question: how could website owners actually stop online attacks, not just track them? Prince later connected with Michelle Zatlyn at Harvard Business School, and the trio formally founded Cloudflare in July 2009, publicly launching the service at TechCrunch Disrupt in September 2010. Early funding included a $2.1 million Series A, Pelion Venture Partners, Venrock, in 2009, a $20 million Series B led by New Enterprise Associates in 2011, a $50 million Series C in 2013, and $110 million Series D led by Fidelity in 2015, before the company's September 2019 IPO. Co-founder Lee Holloway, who built Cloudflare's original technical architecture, stepped back from the company in 2016 following a frontotemporal dementia diagnosis. The company honored his contribution by naming its IPO process Project Holloway. Corporate milestones. Date: milestone 2009/2010. Cloudflare founded and publicly launched at TechCrunch Disrupt. September 13, 2019. Completes IPO on the NYSE under ticker NET. 2020. Announces collaboration with Apple and Fastly on the Oblivious DNS over HTTPS protocol, privacy. 2024. Acquires Bastion Zero, expanding Zero Trust access capabilities, following the earlier $162 million Area 1 security acquisition. May 2026. Announces approximately 1,100 roles, 20% workforce reduction, the company's first mass layoff, alongside record Q1 2026 revenue of $639.8 million, plus 34% year-over-year. Shares fell 18 to 24% on the news. August 6, 2026. Reports Q2 2026 results. Revenue accelerates to $696.1 million, plus 36% year-over-year. Raises full-year guidance despite continued restructuring costs.
Section 4. Business Model. Cloudflare operates a subscription-based freemium software-as-a-service model built on top of a globally distributed network spanning roughly 275 cities in more than 100 countries. The company's original freemium approach, offering free tier security and performance services to small websites while charging enterprises for advanced features, higher usage tiers, and dedicated support, remains central to its go-to-market strategy, functioning as a massive top-of-funnel lead generation engine that converts free users into paying customers over time. Revenue growth is increasingly driven by large enterprise customers. Cloudflare ended Q2 2026 with 4,698 customers, each paying more than $100,000 annually, up 27% year-over-year, with a record 986 net additions to that cohort over the trailing 12 months. The company's dollar-based net retention rate of 120% indicates that, on average, existing customers are spending 20% more with Cloudflare a year after initially signing up, reflecting successful cross-selling across the company's expanding product portfolio, from core CDN and security services into newer areas like the Workers developer platform and AI-related infrastructure products. How to think about it. Cloudflare's freemium funnel is genuinely unusual in enterprise software. Millions of free users create both a massive real-time threat intelligence dataset, since Cloudflare sees traffic patterns across a huge share of the internet, and a low-cost pipeline of future paying customers, a dual advantage that's difficult for smaller, paid-only competitors to replicate. Section 05. Products and Services. Product/service. Description. Cloud Delivery Network, CDN. Caches and delivers website content from servers geographically close to end users, improving loading speed, one of Cloudflare's original foundational products. DDoS protection and web application firewall. Blocks distributed denial of service attacks and malicious web traffic before it reaches a customer's origin servers. Zero Trust/SASE security. Network access security products, incorporating Area 1 security and Bastion Zero acquisitions that verify every user and device before granting access to corporate applications regardless of location. Cloudflare Workers, a serverless edge computing platform letting developers deploy application code directly onto Cloudflare's global network, positioned at the center of the company's agentic internet strategy for AI applications. 1.1.1.1. Cloudflare's free, privacy-focused public DNS resolver, widely adopted by consumers and a well-known consumer-facing brand. AI and developer infrastructure. Growing suite of AI-related compute and infrastructure products supporting both traditional web applications and emerging AI agent workloads, an increasingly important driver of the company's higher compute mix of revenue. Management has increasingly framed Cloudflare's strategic positioning around the concept of the agentic internet, the idea that as AI agents, autonomous software systems that browse, transact, and interact online on behalf of users, proliferate, they will need the same kind of security, identity verification, and performance infrastructure that Cloudflare already provides for human-operated websites, creating a new, large, addressable market opportunity built on the company's existing network. How to think about it? The gross margin compression Cloudflare has reported in recent quarters, non-GAAP gross margin falling from 76.3% to 73.1% year-over-year, is directly connected to this AI and developer platform push. Compute-intensive products like Workers and AI infrastructure carry structurally lower margins than Cloudflare's traditional CDN and security services, so continued growth in this mix is likely to keep pressuring blended gross margin even as it opens new revenue opportunities.
The internet infrastructure and cybersecurity industry continues to benefit from two durable trends: the ongoing shift toward platform consolidation, where enterprises replace numerous point solution security and networking vendors with fewer, broader platforms, and the accelerating adoption of cloud-native application development, which increasingly runs on distributed, edge-based infrastructure rather than centralized data centers. Cloudflare has positioned itself as a primary beneficiary of the platform consolidation trend specifically, bundling CDN, DDoS protection, WAF, and Zero Trust access into a single connectivity cloud offering. The industry has also become a notable proving ground for the broader AI-driven productivity narrative sweeping large technology companies in 2026. Cloudflare's own restructuring, tying a significant workforce reduction directly to a reported 600% plus increase in internal AI tool usage, places it alongside Meta, Microsoft, and Google among major technology companies that have reported simultaneously surging revenue and shrinking headcount, both attributed to artificial intelligence adoption, a dynamic that is reshaping how investors and employees alike think about growth-stage technology company operating models.
Section 7. Market Opportunity. Cloudflare's most immediate opportunity is continuing to convert its expanding large customer base and rising net retention rate into sustained revenue growth, supported by $2,732.0 million of remaining performance obligations as of Q2 2026, contracted future revenue that provides meaningful visibility beyond any single quarter's results. Current remaining performance obligations specifically grew 35% year-over-year, broadly consistent with total revenue growth, suggesting the forward-looking bookings pipeline remains healthy even amid the ongoing restructuring. Longer term, management's agentic internet positioning represents a genuinely new market opportunity layered on top of Cloudflare's existing business. As AI agents increasingly need to browse, authenticate, and transact across the internet on behalf of users and businesses, Cloudflare is betting its existing global network and security infrastructure can serve this emerging category much as it has served traditional websites and applications for over a decade. Network capital expenditure guidance of 14 to 15% of revenue for full year 2026, up from 7% in Q2 alone, signals meaningful ongoing investment to support this anticipated demand. How to think about the opportunity. Watch the pace of large customer net additions and net retention rate together as the clearest read on whether Cloudflare's platform consolidation in AI infrastructure bets are working. Rising net retention specifically indicates existing customers are finding enough value to expand their spending, which is generally a more durable growth signal than new customer acquisition alone.
Section 8. Competitive Landscape. Competitor, Listing, Positioning. Akamai Technologies, NASDAQ, AKAM, longtime CDN incumbent that Cloudflare's founders explicitly set out to challenge. Larger legacy enterprise footprint, but generally viewed as less innovative in newer categories like zero trust and edge compute. Fastly, NASDAQ, FSLY. Direct edge computing and CDN competitor, smaller in scale than Cloudflare. The two companies have also collaborated on select industry initiatives, such as the ODOH privacy protocol. Zscaler, NASDAQ, ZSCAL, a leading pure-play zero-trust/SASE security competitor, competing directly with Cloudflare's zero-trust product suite. Amazon CloudFront/Microsoft Azure CDN, MSFT, NASDAQ, AMZN/hyperscaler native CDN and edge offerings that compete for customers already deeply embedded in AWS or Azure ecosystems. F5, Imperva, private, NASDAQ, FFIV/enterprise networking and application security vendors competing for portions of Cloudflare's WAF and security customer base. Where Cloudflare stands. Cloudflare has differentiated itself through platform breadth, bundling CDN, security, zero trust, and developer infrastructure under one roof. Its record large customer net additions and 120% net retention rate in Q2 2026 suggest this platform consolidation strategy continues resonating with enterprise buyers, even as competitors from both legacy security vendors and hyperscale cloud providers continue investing in overlapping capabilities. Section 9. Management Team. Matthew Prince, co-founder, co-chairman, and chief executive officer. Co-founded Cloudflare in 2009 after earlier launching the anti-spam research effort Project Honeypot in 2004 and has served as CEO since inception. On the Q2 2026 earnings call, Prince stated, "We delivered a stellar second quarter, highlighted by revenue accelerating to 36% year-over-year and record growth in total paying customers, large customers, and developers on our platform." Regarding the May 2026 workforce reduction, Prince told employees in an internal message co-signed with Zatlin that today's actions are not a cost-cutting exercise or an assessment of individuals' performance, and separately told analysts on the earnings call, "We've never done something like this in Cloudflare's history," describing it as the company's first mass workforce reduction in its 16-year operating history. Michelle Zatlin, co-founder, co-chairman, and president, co-founded Cloudflare alongside Prince and Holloway after the pair met at Harvard Business School and has led operations and growth strategy since the company's earliest days. Alongside Prince, Zatlin co-signed the internal message to employees announcing the 2026 restructuring, jointly stating that the way we work at Cloudflare has fundamentally changed, tying the decision directly to the company's internal adoption of AI tools. Dane Knecht serves as Chief Technology Officer. Co-founder Lee Holloway, who built much of Cloudflare's original technical architecture, stepped back from an active operating role in 2016 following a frontotemporal dementia diagnosis. The company's 2019 IPO was internally codenamed Project Holloway in his honor. Additional named executive officers, including the CFO and independent board members beyond those discussed above, information not publicly available in full detail within the sources reviewed for this report. Readers should consult the complete Form 10-K or most recent proxy statement management section on SEC EDGAR for the full slate of executive officers and directors. Section 10. Financial Performance. Metric. Q1 2026. Q2 2026. Revenue. $639.8 million. Plus 34% year-over-year, then a company record. $696.1 million, plus 36% year-over-year, new record. GAAP net loss, $62.0 million. $170 million, widened on restructuring charge. Non-GAAP diluted EPS, information not specified in this source set. 29 cents versus 21 cents year over year, beat $27 consensus. Non-GAAP gross margin, information not specified in this source set, 73.1%, down from 76.3% year over year. Free cash flow, information not specified in this source set, $56.4 million, or 8% of revenue. In plain terms, Cloudflare's revenue growth is genuinely accelerating from 34% year-over-year in Q1 2026 to 36% in Q2 2026, a rare and notable trend for a company already generating well over $2 billion in annualized revenue. At the same time, GAAP profitability metrics look considerably worse than they did a year ago, almost entirely due to the one-time costs associated with the May 2026 workforce restructuring, while the company's non-GAAP adjusted profitability metrics, which exclude those one-time charges, continued improving. Balance sheet. As of June 30, 2026, Cloudflare held $4,162.8 million in combined cash, cash equivalents, and available-for-sale securities, including $1,663.8 million specifically in cash and cash equivalents. The company carries $1,293.75 million of 0% convertible senior notes due 2026, whose if-converted value exceeded principal by approximately $364.7 million as of quarter end, resulting in current liability classification, and $2,000 million of 0% convertible senior notes due 2030, giving Cloudflare a substantial, low-cost capital structure to fund continued network and product investment. Section 11. Detailed Analysis. Latest Quarterly Earnings, Q2 2026. Revenue. Total revenue was $696.1 million, up 36% year-over-year, beating both the company's own guidance range of $664 to $665 million and the $665.4 million Zacks consensus estimate by a meaningful margin. Revenue by geography was 51% United States, 27% Europe, Middle East, Africa, 14% Asia Pacific, and 8% Other, reflecting a broadly diversified international customer base. Gross margin. GAAP gross margin declined to 71.8% from 74.9% a year earlier, a 3.1 percentage point contraction. Non-GAAP gross margin fell to 73.1% from 76.3%, a 320 basis point decline. Management and independent analysts attributed this primarily to a continued shift in traffic and product mix toward higher compute developer and AI infrastructure products, alongside increased allocation of network costs to cost of revenue, though the pace of decline showed early signs of stabilizing. Operating income. GAAP operating loss widened to $205.7 million, driven overwhelmingly by a $150.7 million restructuring and related severance charge tied to the workforce reduction. Excluding that one-time charge, total operating expenses were approximately $554.5 million, up about 23% year-over-year, notably slower than the 36% pace of revenue growth, supporting improved non-GAAP operating leverage, even as the reported GAAP figure looked considerably weaker. Net income. GAAP net loss was $170.0 million, compared with a much smaller loss a year earlier, almost entirely reflecting the restructuring charge discussed above. Non-GAAP net income was $107.8 million, continuing to grow, even as the GAAP figure moved in the opposite direction, a useful illustration of how a single well-disclosed one-time item can create a large gap between headline and underlying profitability. EPS. GAAP diluted loss per share widened to 48 cents from 15 cents a year earlier.
Non-GAAP diluted EPS rose to 29 cents, up from 21 cents in Q2 2025, and ahead of the 27-cent analyst consensus. Cash flow. Operating cash flow was $117.6 million for the quarter, with first half 2026 operating cash flow reaching $279.5 million. Free cash flow was $56.4 million, or 8% of revenue, an improvement reflecting continued revenue growth and disciplined capital allocation even amid restructuring costs. Balance sheet. As detailed in Section 10, Cloudflare ended the quarter with $4,162.8 million in total cash, cash equivalents, and available-for-sale securities, providing substantial liquidity to fund continued network capital expenditure, guided to 14 to 15% of full-year 2026 revenue, and ongoing product investment. Guidance. Management guided Q3 2026 revenue to $736 to $737 million, with operating income of $129 to $130 million and non-GAAP EPS of 34 cents. Full-year 2026 revenue guidance was raised to $2,864 to $2,870 million, up from a $2,809 million midpoint.
At the Q1 2026 report, representing roughly 32% year-over-year growth, with full-year operating income guided to $443 to $445 million. Management commentary. CEO Matthew Prince stated, "We delivered a stellar second quarter, highlighted by revenue accelerating to 36% year-over-year and record growth in total paying customers, large customers, and developers on our platform." Management characterized the company as tracking ahead of its internal goal for GAAP profitability by 2028, noting that GAAP net loss was nearly at break-even when excluding the restructuring charge, and emphasized that internal automation tools, referred to internally as Cloudflare OS, are helping drive continued operating leverage as the AI-first transition progresses. Key changes versus previous quarter. Revenue growth accelerated from 34% year-over-year in Q1 2026 to 36% in Q2 2026, an unusual and positive trend for a company of Cloudflare's scale. Dollar-based net retention rate rose to 120%, up 2 percentage points sequentially and 6 points year-over-year, indicating accelerating expansion spend from existing customers. Large customer, greater than $100,000 annually, net additions reached a quarterly record of 986 over the trailing 12 months. Full-year 2026 revenue guidance was raised for at least the second time in 2026, from a $2,809 million midpoint to $2,864 to $2,870 million. The restructuring charge, $150.7 million, drove a substantially wider GAAP net loss and operating loss than the prior quarter, even as non-GAAP profitability metrics continued improving. Section 12. Growth Drivers. Platform consolidation among enterprise customers. Continued adoption of Cloudflare's unified connectivity cloud platform by enterprises looking to replace multiple point security and networking vendors remains the company's core proven growth driver, reflected in record large customer net additions. Rising net retention across the existing customer base. A 120% dollar-based net retention rate, accelerating both sequentially and year-over-year, shows existing customers finding growing value across Cloudflare's expanding product portfolio, a durable and capital-efficient growth lever. The agentic internet and AI infrastructure opportunity. Management's strategic bet that AI agents will need the same security and connectivity infrastructure as human-operated websites represents a genuinely new, large addressable market opportunity layered on top of Cloudflare's existing network.
AI-driven internal operating leverage. If the AI-first restructuring succeeds as management intends, internal automation, via what the company calls Cloudflare OS, could allow continued revenue growth with a meaningfully leaner cost structure, supporting the path toward the company's 2028 GAAP profitability target. Growing remaining performance obligations. $2.73 billion of remaining performance obligations, with current RPO growing 35% year-over-year, provides substantial forward revenue visibility, supporting continued guidance raises.
Section 13. Key risks. 4. Unprecedented workforce restructuring. Execution risk. A 20% workforce reduction is, by the company's own characterization, unlike anything Cloudflare has done in its 16-year history, successfully maintaining product velocity, customer support quality, and company culture through a cut of this scale carries genuine execution risk that will only become fully clear over the coming quarters. 4. Extreme valuation. Heading into Q2 2026 earnings, Cloudflare traded near a record high at approximately 48 times sales, a valuation that independent analysis specifically noted left, quote, little room for error, unquote, and where, quote, a standard beat may disappoint, unquote, meaning any deceleration in growth or negative surprise could trigger an outsized stock reaction. Continued gross margin compression. Non-GAAP gross margin has fallen 320 basis points year-over-year to 73.1%, driven by a mix shift toward higher compute AI and developer products. If this trend continues or accelerates, it could pressure the path to the company's stated 2028 GAAP profitability target, even as revenue growth remains strong. Market sensitivity to restructuring news. Shares fell 18 to 24% around the initial May 2026 restructuring and guidance announcement, despite Cloudflare simultaneously reporting record quarterly revenue, illustrating that investors can react sharply and negatively to workforce reduction news, even amid strong underlying growth, a dynamic that could recur around future restructuring updates. Intensifying competition across multiple fronts. Cloudflare competes simultaneously against legacy CDN incumbents, Akamai, pure-play security vendors, Zscaler, smaller direct peers, Fastly, and hyperscale cloud providers offering native CDN and edge alternatives, AWS, Microsoft Azure, any of which could pressure pricing or slow customer acquisition in specific product categories. Convertible debt structure considerations. The $1,293.75 million of 2026 convertible notes were classified as a current liability as of Q2 2026, given their if-converted value exceeded principal, meaning the company's near-term balance sheet presentation and refinancing considerations around this maturity warrant continued monitoring, even though the notes carry a 0% coupon. Unproven agentic internet market timing. While management's AI agent infrastructure thesis is strategically compelling, the actual pace and scale at which AI agents generate meaningful, monetizable internet traffic remains uncertain industry-wide, meaning this specific growth driver's timeline and magnitude are not yet fully proven. Section 14. Valuation. Price/sales multiple, pre-Q2 earnings. 48 times, near a record high share price. FY 2026 revenue guidance, $2,864 to $2,870 million, nearly 32% year-over-year growth. Dollar-based net retention, 120%. Remaining performance obligations, $2,732.0 million. Current RPO plus 35% year-over-year. FY 2026 operating income guidance, $443 to $445 million. Metric.
Value. Cloudflare's valuation reflects a market pricing in sustained best-in-class growth at roughly 48 times sales heading into the Q2 2026 print. The stock commanded one of the richest multiples among publicly traded software and infrastructure companies, a level independent analysis explicitly flagged as leaving little margin for a disappointing quarter. The actual Q2 2026 results, accelerating revenue growth, record large customer additions, and a raised full-year outlook appear to have justified at least near-term confidence in that premium, with independent commentary characterizing the 36% top-line acceleration and immense guidance hike as outweighing near-term restructuring noise and gross margin compression. Nonetheless, investors should recognize that a valuation this rich requires continued near-flawless execution on both growth and the ongoing AI-first restructuring simultaneously to be sustained over time.
Section 15. Upcoming catalysts. Catalyst. Expected timing. Why it matters. Q3 2026 earnings report. Information not publicly available, typically early November, will show whether 36% plus revenue growth can be sustained against Q3 guidance of $736 to $737 million and provide an updated read on restructuring progress and margin trajectory. Continued restructuring completion and cost realization, ongoing through 2026, will determine whether the AI-first operating model delivers the operating leverage management expects without disrupting product velocity or customer satisfaction. 2026 convertible notes maturity considerations. 2026. Given current liability classification, any refinancing or conversion activity around the $1,293.75 million 2026 notes bears monitoring. Further large customer and net retention trend updates. Ongoing, each quarter. The clearest near-term indicators of whether platform consolidation demand remains durable. Additional AI/agentic internet product announcements, ongoing, would provide concrete evidence of monetization progress on management's longer-term AI agent infrastructure thesis.
Section 16. Long-term outlook. Cloudflare's long-term outlook depends on successfully executing two things simultaneously: sustaining the platform consolidation-driven growth that has already proven durable across a large and expanding enterprise customer base, and completing its unprecedented AI-first workforce restructuring without disrupting the product innovation and customer experience that have historically differentiated the company. If both succeed, management's own internal target of reaching GAAP profitability by 2028, which the company says it is currently tracking ahead of, excluding restructuring charges, would mark a meaningful inflection point, transforming Cloudflare from a high-growth, GAAP unprofitable software company into a large-scale, profitably growing platform business. The agentic internet thesis represents Cloudflare's most significant longer-term strategic bet, and its ultimate payoff remains genuinely uncertain in both timing and scale industry-wide. Investors should watch for continued evidence that AI-related infrastructure and developer products are contributing meaningfully to revenue growth and net retention over the next several years, alongside whether gross margin compression from this mix shift stabilizes or continues, as key indicators of whether this strategic direction is paying off as management currently expects. Section 17. Bull Case. Bull Case Summary. Revenue growth continues accelerating or holds steady in the mid to high 35% range as platform consolidation demand remains strong and large customer net retention continues climbing. The AI-first restructuring successfully delivers the operating leverage management expects without disrupting product velocity, allowing Cloudflare to reach or beat its 2028 GAAP profitability target. Gross margin compression stabilizes as AI and developer product scale improves. The agentic internet thesis begins generating tangible, monetizable AI agent traffic and revenue, and the market rewards this combination of sustained growth and improving profitability with continued premium valuation. In this scenario, Cloudflare could solidify its position as one of the preeminent internet infrastructure platforms of the AI era, supporting continued share price appreciation from current levels. Section 18. Bear Case. Bear Case Summary. The First restructuring proves more disruptive than management anticipates, slowing product development or degrading customer support quality as the company operates with 20% fewer employees. Revenue growth decelerates from its current accelerating trend as large customer additions or net retention soften. Continued gross margin compression from the AI/developer product mix shift persists longer than expected, delaying the path to 2028 GAAP profitability. Competition from Akamai, Zscaler, Fastly, and hyperscale cloud providers intensifies pricing or customer acquisition pressure, and the stock's already rich towards 48 times sales valuation compresses sharply on any growth deceleration or execution misstep, as the market's sharp reaction to the initial restructuring announcement already demonstrated is possible. In this scenario, NET shares could see substantial downside even if the underlying long-term connectivity cloud thesis remains intact. Section 19. Final Investment Conclusion. Cloudflare enters the second half of 2026 with genuinely accelerating growth, 36% year-over-year revenue growth, record large customer additions, and a 120% net retention rate, validating the company's long-standing platform consolidation strategy and its more recent agentic internet positioning around AI infrastructure. Q2 2026's beat and raise quarter, delivered even as the company absorbed a $150.7 million restructuring charge, suggests the underlying business remains genuinely healthy through a period of significant organizational change. At the same time, investors need to weigh this strong operating momentum against real, still unfolding execution risk. A 20% workforce reduction is an unprecedented event in Cloudflare's history. Gross margin has compressed meaningfully as the business mix shifts toward AI infrastructure, and the stock's roughly 48 times sales valuation heading into this report leaves very little room for disappointment on either the growth or restructuring execution fronts. The market's sharp initial negative reaction to the May 2026 restructuring announcement, despite record revenue in that same quarter, is a clear reminder that sentiment around this stock can move quickly in either direction. Bottom line, Cloudflare offers investors exposure to a best-in-class internet infrastructure and security platform with genuinely accelerating growth and a credible, if unproven, long-term AI agent infrastructure opportunity, but at a premium valuation and amid an unprecedented internal restructuring whose full execution risk will only become clear over the coming quarters. This report does not constitute a recommendation to buy, sell, or hold NET shares. Readers should review the company's complete SEC filings and consult a qualified financial advisor before making any investment decision.